Alrighty. What's up, people? Should be good. Should be live. Let me know if there's anything awry. But I already see the likes coming in. So that is awesome, guys. Make sure you're hitting that thumbs up because we are in for a good show. So no Fat Man Zoom, as you can see, just me. Fat Man Zoom was out of town. And I got super confused about scheduling and whatever else. He did let me know about it last night, too. And I just like, boop, way over my head. But nevertheless, welcome to the chaos. My name is Brad. The stock market is crazy and chaotic, and we've made it our mission to help you guys own it. And today has been wild. We talked a bit about what we thought the market could look like going into the week yesterday during Stock Watch Sunday, which if you missed that, make sure you're going back and watching that if you guys wanted to take a look at what our expectations are for the whole week. But today didn't disappoint, and there wasn't a whole lot of surprises, even though it was a bit all over the place. What was a bit of a surprise was that the Fed announcement came out right away. But we'll go ahead and get into that first, though. Let me get to the starting five. We got Lindsay Rice, Fernando Pereira, Savvy Money Show, Jay Chocolate, Primetime DJs. You are our starting five. Thanks so much for coming in early. Appreciate that. And yeah, so before we get into it as well, just kind of want to let you guys know what brought you this show in the first place, and that is ownthechaos.com. If you guys want to go check out ownthechaos.com, we put out a watch list for you guys every single day of the week, and it's absolutely free. If you want to go check that out, we put out 5 stocks before the market opens. We give you a snapshot of what we think might be making the moves that day and maybe even in the near future. And we've had some bangers on there. I put Marathon Oil out on that on Friday, rather. And Marathon Oil in general is coming back and making a huge move. Dick's Sporting Goods is making a big move as well. A couple of other big ones. I'm sure people in the Chaos crew can shout that out. But guys, if you want that free watch list, make sure you're going to ownthechaos.com. We'd love to have you guys as part of the Chaos crew. All right. So, what's going on today? The markets are a little bit all over the place. We saw the NASDAQ just go whoop, crazy move from the NASDAQ, went nuts. And really, futures across the board before the market opened went nuts. And then out comes the Fed announcement. Joe Biden announced that Fed Chair Jay Powell will be the new, or I guess the renewed Fed Chair for another 4 years, which the market seemed to really like. We did see the 10-year go up. It went crazy, and that is why the NASDAQ tanked. Big tech tanked. A lot of the tech stocks, really high multiple tech stocks, also took a nosedive. Whereas the rest of the market, the cyclicals, the banks, they went nuts. Oil, all that good stuff. So why is that? Why did that happen? Why did we see such a shift, such a rotation in the stock market? We'll get into that in a moment. Just wanted to check in with some folks. Snooker says your watch list this morning was popping. He has some really good ones on there. Rudy Brown says, can you watch AESE earnings for me as well? Yeah, we can certainly watch that. So guys, bring it into the chat. So we also have earnings reactions today too. Forgot to mention, we got Zoom. We'll get back to why the market was doing what it was doing in a second, but we got Zoom earnings today, a couple of other ones, but Zoom's the big one. We'll get into that a little bit as we get closer to the closing bell. We've got AESE, Urban Outfitters. I don't know if anybody cares about any of the other ones, but we certainly, if you guys are curious about them, you can certainly bring them to the table. And I'll give you some insights as to what I think is going to be happening tomorrow pre-market as well. We'll give our reaction to earnings that happen tomorrow, but just kind of want to give you a preview a little bit. So there's Dick's, Best Buy, Xpeng, American Eagle Outfitters, Dollar Tree, Abercrombie Fitch, Burlington. Some more retail companies that are going to be reporting tomorrow. And I think the trend does continue, but I'll give you some insights on that a little bit later as well. Jeff Chocolate brought in a good question here in our Chaos Crew Discord channel, which again, if you guys want access to that, make sure you go on ownthechaos.com. The link is in the description. We'll love to have you guys over there, but he asked in Discord, and I appreciate him bringing it back here. What does the inflation thing do short-term and long-term? We'll get into that because that's partially why the stock market moved in the way that it did. So today, if you guys live under a rock, today the White House announced that the Fed Chair Jerome Powell, aka Burt Powell, Money Machine Powell, got renominated, and he still has to obviously go through the Senate. The Senate has to vote on it. It all has to go through. But all signs are pointing to that. That's going to happen. There was a lot of I wouldn't say a lot, but there was some noise, I guess, especially from certain lawmakers that were kind of gunning for uh, a new person, Boehner. So that should be Brainerd. Sorry, um, that should be something probably wouldn't have been a big deal even if the White House chose Brainerd, because Brainerd is actually a little bit more dovish than Jerome Powell, if you can believe that. A little bit more progressive. So some of the progressives on the left side of the aisle, we're trying to push for Brainerd a little bit. Lael Brainerd is her name, and so um, very qualified, but still had some weird, I guess, viewpoints on how things should be run. And so I guess it was too much for the Biden administration, so they ended up putting uh, Jerome Powell up for nomination. That was great for the stock market. Why? Because it's of the consistency. Because there's no guessing, right? If Brainerd had come in, there have been a lot of questions. What is she going to do? Is she going to slow down tapering? Is she going to speed up taper? Like, there's just so many questions surrounding around Lael Brainerd that, um, having Jay Powell back at the helm provides a lot of peace of mind for investors. And so everybody knew which way they wanted to go. Jerome Powell has made it pretty clear that they're going to taper, and there's also talk of potential tapering increasing because of some of the inflation that we're seeing. Now, I'm not so sure that I'm in that camp. I don't think that we're going to see any kind of speeding up of the taper, and there's a lot of sentiment surrounding around rates going up, the Fed raising rates in May, which I just don't know if that's going to happen either. I think that some of this is just noise, and I think some of it does end up calming down some. Now, I'm not going to sit here and tell you that inflation isn't happening, because it certainly is, but to the degree in which people are panicking about it isn't really something that I subscribe to. I think that there's clear pockets of inflation. You can't, especially on the wage side of things, as wages go up, things cost more, and you can't just say, hey, guess what? I know we're paying you this much, but now we're going to go back and pay you what you were getting paid. So that's not going anywhere. But there is some things that should. I think that energy at some point will cool off. I think, materials, that sort of thing, will cool off. And services, certain things for services should chill out as well. I think some of it's here to stay, but not all of it. And so I think that the Fed obviously has a tight rope to walk on. But what does that mean for your investments? As Jeff Chow now asks, what does this mean short term and long term? So short term, I think that going into the rest of the year, I think that equities in general are going to continue to go up. I think we're going to see a huge move in the market, almost kind of like an everything rally. You probably heard this term before if you follow any other YouTube channel or even CNBC. They talk about this everything rally, or what's called a Santa Claus rally. I think that's probably more or less going to happen. We saw a little bit of a pullback over the last couple of weeks. I think we see a little bit more volatility this week, as I mentioned in Stockwatch Sunday. But I think starting next week, we should start to see some things really ramp up. Now, what does that mean after the first of the year? What are we looking at going into this period in which the Fed is going to taper their bond purchases and, maybe start considering raising rates? Where do you go? Where do you go in times of inflation if you think that's really happening? And that's value. Nobody wants to talk about it, because for the last 2 years, we've all been hearing about meme stocks, high valuation tech stocks that aren't making any money but have nosebleed valuations. And I think that for me personally, it's funny. I was actually talking about some of these types of stocks last night. And for example, just things that are low PE, right? That have low valuations, even though maybe the prices move some, but they're not anywhere close to the valuation of something like a Rivian, for example, that's finally coming down. Or, I mean, take your pick. Some of the high flying tech stocks, for example. And I think that moving into some of the grandpa stocks, as somebody coined it last night, I got called a boomer of all things, is probably going to be things what people rotate themselves into. The best hedge against inflation, if you actually think it is happening, is going into value stocks, particularly ones that give you dividends. because the companies, their bottom line should go up. Their top and bottom line should go up with inflation because they're going to be raising their prices. So if they raise their prices, that increases your income. And as long as the company has pricing power. Now I'm talking about stocks and companies such as energy and such as like a Verizon, utilities, that sort of thing. And even the Apples and Amazons, they're still going to do okay. But I think that the big rotation is going to go into some of those cyclical stocks, if you guys have heard that term before. So I think that's going to be more or less of the rotation that we see probably in the first half of the year. I'm thinking maybe somewhere around end of January, beginning of February. And that's kind of what we see anyway. We see a little bit of a rotation during that time of the year historically as it is. So I think personally, when we look at inflation and how it gets treated and how the market's been moving, obviously we're sitting at all-time highs across the board. And so you got to ask yourself when the correction is going to potentially happen. And I think the closer we get to a decision on rate raises, rate increases, then I think that's when we start to really start to make some noise as far as like rotating into those value stocks. And I would venture to say that some of those value stocks could actually start acting like growth stocks. I mean, look at the banks, right? Look at the banks over the last year. They're going to continue to go up as they continue to buy stock back, and dividends are still going to be there, all that good stuff. So that's what I think will probably more or less happen now that we know that Fed Chair Powell is back at the helm for the next 4 years, which I'm not really all that surprised about. And I told you guys yesterday what I thought was going to happen with that. So just checking in here on some of the folks that are chatting away. Jeff says go to the yeah, nice. The market doesn't like uncertainty. That's exactly right, which is why we saw the reaction from the market today once we were able to confirm that Powell was going to be back in his chair, potentially, I guess, for now. Like, he's got to be voted in, but that's looking like that's going to be a thing. Got 73 of you guys hanging in here, so make sure you're hitting that thumbs up. We certainly would appreciate it. And again, make sure you're going to ownthechaos.com if you guys want to get our free watch list that we put out every single day. One of the big ones this year has been Affirm. That's kind of one of our biggest trades has been Affirm. So, and that was from $61 where we put that in the watch list. And we expected a big move like that, but man, did that thing from $61 down to $160, and it's still going. So go check out the watch. You can get it for free at ownthechaos.com. Would love to have you guys there. The link is in the description. Checking here. Savvy Money Show talking a little bit more about the value stock, shipping stocks. That's a great example. UPS, FedEx, names that aren't sexy but are going to be sexy because they're going to make you money. And everybody likes making money, right? It's going to be real sad when the high yielding stock or the high multiple stocks, meaning the high price to earnings multiple, they're going to tank. They're not going to do well next year, I don't think. I'd be very surprised if they did. Not saying the meme movement is over by any means, but a lot of those that you saw on Wall Street Bets are probably not going to fare very well. Speaking of FedEx, Daniel Camarena live from the FedEx warehouse says volume's up today. Will die down this week, but pick back up next week. Yeah, Daniel Camarena works over at FedEx out in Cali. So appreciate you tuning in. And bring your questions, guys. So with it just being me, I get to be a little bit more intimate with y'all, It's kind of nice sometimes. Not going to lie. We love Fat Man Zoom. But every once in a while, some one-on-one time is always nice. All right, so we got about 15 minutes before the close. We can chat a little bit about Zoom. So I saw some questions about Zoom. So Zoom right now, their estimated earnings per share is around $1.09. and their revenue, the expected revenue is around 1.02 billion. We take a look at the stock today, and the stock is slightly down. Last I checked, yeah, it's down around 3%. So I'll go ahead and share my screen with you guys so you guys can look at the chart, see where we're at. And this has been struggling, right? This is down 50% from its highs. Take a look at the daily chart. It has been rough, absolutely rough, really, since the announcement of the vaccine. Once the vaccine was created, we saw Zoom just go right down the shitter from $588 highs all the way down to what we're seeing it at now around the 240 area. So it actually hit 52-week lows today. Really rough stuff for Zoom. That being said, Zoom isn't going anywhere. Now, I would venture to say, I would argue that you look at the multiples on this and look at where it's sitting at fundamentally, and it is overvalued still, even with this 50% move down. But the fact of the matter is, when you compare it to other tech stocks, it's kind of right in line with some of the other tech stocks that we're seeing. And Zoom is pretty cash heavy. They don't have a whole lot of debt, and they're continuing to grow. So the growth story is certainly here for Zoom, and they're operating in positive operating margins. So I really like Zoom, and this hybrid work from home thing isn't going away either. So you can make arguments that, yeah, well, there's Microsoft Teams and there's other video conferencing platforms, but Zoom is it. When Zoom's a verb in households now. It just is. Through the pandemic and all that, it just became a verb. And so when you have a company and a brand like that, it doesn't just go away. And so I think that Zoom certainly could shed a light on where they're going as far as the growth story is concerned. And I think that is definitely something to pay attention to. Now, that being said, this earnings may be still a bit tumultuous. Their last couple of earnings, they've still been beating, but the stock goes down regardless. So we're just not going to see the type of growth that we saw back in 2020. It's just not going to continue to be a thing. First of all, and it wasn't sustainable for one, but the growth story is still there. And so that's why I still like Zoom, but I wouldn't be looking to buy this until we see what the earnings are actually looking like. If you're already in it and you're looking at it from a long-term perspective, I think that you're probably going to be in okay shape. But if you are not in it and you're looking for an opportunity to buy it, I think I would wait till after the reaction of these earnings, because it's still a bit of a guessing game at this point as to what it's going to do. Too risky, in my opinion, to be owning it going into earnings, but might be presenting itself with an opportunity afterwards. I see some people chiming in here. Philip Stroh says, I don't think Zoom will beat earnings. I think they will, actually. They've beat it pretty consistently. So the $1.09, they came in at $1.16 the quarter before. And so I think, I'm sorry, they came in at $1.36 the quarter before. The expectation was 116. And I think that a 109 is actually a bit conservative for Zoom. I think that they do beat that. My guess is going to be around 123. It's going to be my estimation. I think that Zoom comes in at $1.23 per share as far as earnings are concerned. And they come in at around 115 billion. Not 115 billion. Hold on. 115 billion. 1.15 billion is where I think that they'll come in at. Jeez. That's just my expectation. I think that they beat, and I think they'll do fine, but I don't think the stock actually reacts much because it just hasn't over the last several quarters, even though they've beat on earnings per share. Victor T says, ask a great question. So last week, Target had earnings, and he's now asking, will Target pick back up? Earnings were decent, but it's been on a downtrend since then. So yeah, Target actually came in with incredible earnings. They came in with great earnings last week, beat on top and bottom line, beat the revenue, and they actually raised their guidance for next year too. But the stock still came down. Now, why is that? Well, we did see a classic textbook case of buying the rumor, selling the news. I think everybody knew that Target was going to have pretty good earnings. And what caused the sell-off? Investors were looking for any little reason to sell this thing. So what was it? What was the reason? Well, Target talked about their margins. being cut a little bit, even though their margins came in above what the expectation was. They still talked about the margin crunch because of the supply chain issues and labor shortages and that sort of thing. So it did cut into their profit margin a little bit. And so that's why Target moved down. This, in my opinion, is actually a good opportunity for Target. If we look at where this came down to and where it's bouncing from, I actually think that Target is set up for a really nice bounce and move into December as we get into the holiday season. So I think that this is actually a really good opportunity, Victor, to be looking for in either a place to add to Target or even enter into Target because, like the bounce here, we just take a look and see what's going on today. Target isn't going anywhere. Those earnings were amazing, and the fact that they raised their guidance, I think that this also just speaks volumes to what Target's doing. The e-commerce platform is just incredible, and so I really like this as well. Great question, but retail is going to be fine. Any of the retail that's pulled back, I think, are definitely good opportunities. Walmart's in that same boat. You know, you look at Target, Walmart, they kind of had a similar situation, even though Walmart's actually up today. But Walmart had a far greater reaction to their earnings than Target did. You can see that this move down was pretty significant, but lo and behold, it came down and touched this support that we identified with our Chaos Crew folks. And so really liked it at 142. Looks like it held it just fine. Now back up over 145. Which, by the way, guys, if you want to go check that out, go to ownthechaos.com. You can get our free watch list from us. Link is in the description. Jeff Ponica, what's up, Jeff? Jeff says, I'm excited for Dollar Tree. Their earnings are tomorrow, pre-market. Great retail play. I agree. I think that Dollar Tree is also going to do well. Listen, the consumer is just buying all kinds of shit right now. Right now, Dollar Tree is down a little bit, but this thing's already gone crazy. I do think that there's potential for Dollar Tree to actually go higher. Had an activist investment group coming in here, and I think that this thing has the potential to keep going up. Now, that being said, it could be another case of what we saw with Target, right? Because of the crazy move up, that maybe this is an opportunity to take some profit after earnings. But I would be excited to kind of see what's going on with that as well. Another retailer that's reporting tomorrow is Dick's Sporting Goods. And you all know that I love me some Dick's. Awkward pause. Because we're all 12 years old, right? In all seriousness, Dick's Sporting Goods could be potentially breaking out after earnings are released tomorrow. And I think that the trend with Dick's is going to be the same as what we saw with Macy's and Kohl's and some of the other ones, where we're seeing, you know, a gradual move back up after a pretty decent correction. And with their expansion on the deal that they have with Nike, and we saw how Nike's been doing, it's been doing incredible. And we look at their e-commerce platform. I just got done talking to you about Targets, but Dick's is very good. Dick's, their e-commerce platform, they saw over a 100% increase in online sales, and that's compared to 2019. And so I think that trend also continues. It's not just about their stores, not to mention that, you know, golf has really gotten to be super popular. I have a buddy of mine who actually is a golf instructor, and he said that just the interest has been insane. And that's just somebody who's in the industry, but like Dick's is very big into golf equipment. They own Golf Galaxy. So that, I think, in my opinion, is also going to bode well for them. Here's the other thing about Dick's Sporting Goods. You have the back to school crowd, right? The back to school crowd. And how does that relate to Dick's Sporting Goods? Well, if everybody's going back to school, everybody's playing sports again. So just another a bullish example of why Dick's Sporting Goods, in my opinion, will actually continue to do extremely well. I do personally have calls on this on Dick's Sporting Goods at a 135 strike. They don't expire until next year, early next year. So really positive outlook here for me on Dick's Sporting Goods. If this earnings does go well and we see a breakout above that 147.39 all-time high, then I probably will be managing this trade a little bit more. I think, we'll see. You'll see me probably trim out of this. Maybe hold on to some as we get into closer to the holiday season. But I think that if this just like pops off like crazy tomorrow, then I probably will take some sort of profit off the table, at least take out what I put into it and then ride free shares, which is what I did with NVIDIA today, by the way. NVIDIA has been an absolute monster. And so I actually made the trade before the turn down. So I actually ended up selling half of my position on Nvidia. That 320 strike out in February is the expiration. So I actually ended up selling half of my position of Nvidia up here, and then obviously turned down with the rest of the tech today. So it looks like obviously that was a good call, but I'm going to hang on to those free money that I have from Nvidia, playing with house money on that, and see where it goes from here. I think the bounce back will be pretty good. That's Dix with an S. Yes, it sure is. Says Don of the Don Fran Show. What's up, bro? Okay. Just checking in with you guys. Keep the comments coming. Charlie Connor asks, is Airbnb a buying opportunity? That's a really great question. Yes, I think it could be. Not to say that Airbnb can't go down a little bit lower, but what I will say is that it did touch down here on a pretty decent support around 176.75. Remember, that area was such a tough resistance for it previously. Look how many, this is a triple top here on Airbnb, and we actually saw this act as support, during its early IPO days, but it came down and actually bounced off of that 176 area. And I think that is very telling that it didn't break through that, which is also, by the way, the 50-day moving average represented by this yellow line. So I think that was a perfect spot to actually grab some Airbnb. Great risk reward here, in my opinion. And the reason why it's actually moving down, guys, is because of what? Anybody know? Just out of curiosity, I'll let the comments roll in. If anybody wants to give me some thoughts as to why Airbnb moved down today, there's two reasons why this could have moved down today. And I think there's one obvious one and maybe one that's not so obvious. And I'll let you guys in on that once I start to see some comments roll through. But if you guys are just joining me, we got 113 of you guys hanging in the live stream today. Appreciate you hanging out. If you guys haven't liked the video already, hit that thumbs up. I certainly would appreciate it. We got 34 likes in the house. I know we can do better than that. We do have Zoom's earnings that we're going to be responding to and reacting to after hours. We got about 2.5 minutes before the close. So super excited about that. And yeah, so I got some answers coming in here. I love it. I love it. I love it. I love it. So lots of answers about COVID. So I see that Charlie Connor said COVID. Sean Dupuis said UK COVID. Is it Asadane? Asadane? I'm butchering that. Says COVID. So a lot of answers on COVID. That is one. So that is one reasons we're seeing some increases in COVID cases out in Europe. Some lockdowns are in the Netherlands and in Austria. Some small pockets of increases. And even here in the U.S., we're seeing Delta kind of like make its move from the south and western states all the way up to kind of like the northeast. So we're seeing increase in cases there. There's like an 80% increase in Delta cases in New Hampshire, of all places. So we are seeing that. But here's the thing. This is why I think Airbnb is a buyable event. The move down here is a buyable event. There's one other reason. And the other reason is because of the 10-year yield. Airbnb has a pretty high multiple, and they're not yet quite profitable. They had a profitable quarter that they reported on last time around, but not really consistently profitable. So, a company like Airbnb probably would rely a lot on loans that they would need to continue to expand their business and to grow and all that stuff. But if the loan interest rates are higher than what they are now, then it stands to reason that they're going to be paying more on those loans. So it's going to hurt their bottom line, thus hurting their earnings. And then you see the performance of the stock go down. Pretty simple, right? But Airbnb, I think, will be just fine. I think that the main catalyst is because of COVID. The secondary is because of the 10-year going up. And we saw that last fall when Airbnb took that big hit because the 10-year was going crazy. You guys remember that. But looking at Airbnb now, the way that it bounced from a technical standpoint on the chart, it looks fantastic. From a fundamental standpoint and from, just kind of everything going on in the world, I think that the Delta variant is going to be very short-lived in the areas that we're seeing increases in. Some people are noting it as a potential fourth wave, quote unquote, which makes sense. We're going to get colder. And people are going to go inside more. You're kind of like in an incubator for that kind of stuff to just breed. So I think that we're going to see some increases, but I don't think it's going to be anywhere near what we've seen in the previous waves. A lot of reasons for that, right? Therapeutics are now out that you can just take a pill if you get COVID. Boosters are being administered now for all adults, and obviously the vaccine too. So there's just so many good tools and weapons in the tool belt, that I don't think that this is going to be anything that has any kind of legs to it that's going to permanently or long term affect Airbnb. So, in my opinion, I think this is a viable event. You look at this, and it's down to around 180 right now. Let's take a look at the chart real quick as we closed on the day. Airbnb closed at 180. I think this is actually a really good opportunity to get in on this. You guys know that I've been a long-term holder of Airbnb, still continue to be that. And I'm going to be holding it for the foreseeable future. Travel demand is going to come back like crazy. And we're already seeing that, right? Especially with the holidays. And the international travel has been, restrictions have been lifted in the US. So this is going to continue to be just fine. I like it a lot. All right. So market is closed. Don just says I'm not in Zoom, but I hope it pops. Wouldn't mind shorting it. Yeah. I mean, I don't know if that may be the case. Let's take a look at this. We're going to pull this out to the 1 minute chart. So again, if you guys are just tuning in and wanting to see where Zoom goes, we're giving our live reaction to Zoom earnings. Estimated earnings per share at $1.09, and the revenue that they're expecting is around a 1.01 billion. I was predicting this to be around, I believe I said 123. Sorry, 123 was my expectations earnings per share, and I think they come in at 1.15 billion. So we'll see what that comes in at, and we'll give our reaction to it. I'm not in Zoom personally, but Fat Man Zoom is. If you guys noticed, he's not here today. So Fat Man Zoom is in Zoom. He's been in for a while, and it is the Zoom in Fat Man Zoom, obviously. So we'll just continue to see. Once those numbers come in, I'll share them with you guys. I got Twitter opened up right now. Oddly enough, it usually is where we get the biggest move or the quickest numbers is from Twitter. And it looks like it's starting to move right now. So right now, Zoom is actually making a pretty decent move here after hours and is continuing to go up. This is the 1 minute chart that you guys are looking at on Webull. If you guys don't have Webull, it's a great platform. I've loved it. Go check it out. In the links in the description. I get free stocks. You get free stocks. You know how it works. Go check out that link. Open up an account with Webull. As soon as I have those numbers, or guys, if you want to throw them in the chat too, since I'm riding solo today, I'd appreciate it. But right now, we're getting some decent action out of Zoom right now. Now back to flat after hours. No numbers on them just yet. Andre says Zoom will pop up because it's oversold. Potentially, it doesn't necessarily mean that just because it's oversold that it is going to pop up. But right now, it's certainly looking pretty good. It's up to around 2% here after hours. Don't have those numbers in yet, but as soon as I do, I'll certainly share them with you guys. Zoom never goes up. What sorcery is this? Miguel says that in the chat. That was pretty funny. Hey, like I said, I don't think that Zoom's going away anytime soon, guys. So I'm actually looking to see what they have to say as far as growth is concerned and what kind of guidance and outlook are we going to get from them this year? Because that'll be interesting. That'll be interesting. I was actually looking to see, we had a couple of bold predictions at the beginning of last year. And one of my bold predictions was that Zoom would get into the S&P 500. That didn't happen. It doesn't look like it's going to happen, but I still think that it could potentially be a candidate in the future for the S&P, given the growth and just how they continue to just crush it. I mean, it's just a really well-run company apart from everything else. Imagine, I love this. Paul G says, imagine how bad Skype fumbled the 10 plus years head start that it had. It's so true. And then Microsoft bought them and then bastardized it even more with Teams, right? I have lots of loved ones and close friends and family that have teams and they hate it compared to Zoom. Look at this. Here we go. Zoom is now continuing to move up. It's up 5% here after hours. Holy shit. Come on. Here we go. Numbers are out. As soon as I have them, I will be sharing them with you guys. Let's see here. See if I can pull it up. All right. Third quarter total revenue is 1.05 billion, which is a beat of the 1.01. So I was off by that by a little bit, a little overzealous. They're up 35% year over year. So they're 35% better in from where they were in 2020. So that's pretty incredible. Now up over 5% here after hours. Revenue is up. Number of customers contributing more than 100,000 in revenue, up 94% year over year. That is incredible. Almost 100% customers contributing more than 100,000 in revenue. So $100,000 customers. That's crazy. That is crazy. Don't have the earnings per share, but my hunch is that they beat. But they obviously beat on revenue, which is good. Really good stuff coming from Zoom. So the stock is now up 7% here after hours. If you guys are just tuning in, we're reacting to Zoom's earnings, and they obviously are popping off here. Really nice move. Andre says Zoom will be up 30% today after hours. I don't know about that, but it certainly looks great here so far. 261 is the high here in after hours trading. Let's take a look at the daily to see where this potentially could open up at. So looking at the daily chart here, I like this resistance here at around 272. If this moves up above that, I think that could be good for Zoom. The 50-day moving average is at 267, so we're not even close to that yet with it sitting here at 261. But it certainly looks promising. Stock's now up over around 7.5% after hours, after coming in on a pretty solid beat. I don't have earnings per share just yet, but as soon as I do, I'll give them to you. But their margins look pretty good. They said in 2021, they expect to bring in revenue between 4.079 billion to 4.08 billion, above their expectations of 4.02, which is great. Estimated their earnings per share came in at $1.11. Estimated earnings per share were $1.09. So I was a little bit high on that. Obviously, I was a little bit more bullish than I probably should have been, but nevertheless, they beat on top and bottom line. Huge growth here, and this is amazing. Look at this. The stock's going up now. It's up 9% here after hours. We've seen Zoom have crazy moves like this before. But unbelievable. So yeah, guys, if you're just tuning in, thanks for hanging out with us so far, but we are currently reacting to the Zoom earnings call right now, the earnings report rather. They came in and beat on revenue and beat on earnings per share, and then raised their guidance for the full year, for the full fiscal year. So the trifecta, as they call it, giving you every reason to buy it here at this point. Stock's now up 8% after being up as high as 9%. Really nice move out of Zoom. Check it in on some other ones. Urban Outfitters has had earnings today too. We'll see what they're doing, if there's any kind of movement there. Ooh, stock's getting hammered here after hours. I'll take a look at the chart here. Anybody in Urban Outfitters right now looking at this and wondering why it's moving down? It doesn't look like it's looking good for Urban Outfitters here. URBN is the ticker. Revenue came in for Urban Outfitters at 1.13, and it came in line with their 1.13 expected. Estimated earnings per share were 84, and they came in at 89. So they actually beat on earnings per share, and then came in line with revenue. The stock is now down 10%. No real clear reason as to why just yet. Record profits. Not quite sure why the sell-off here. So there must be something about their guidance that investors aren't liking. That's my hunch on this so far. But Urban Outfitters is really taking a beating after coming in line with their revenue and then actually beating earnings per share. Don Fran says that's what I meant. How I need my Zoom chart to look like. Yeah. I don't know if you're getting that at this point. Stock looks great here. You guys are just tuning in. Zoom came in and beat earnings per share, beat on revenue, raised their guidance, all the things that you want to hear. And the stock is now actually doing pretty darn good here after hours. I know you guys are asking about AESE as well, Allied Esports Entertainment. Looks like those earnings might be out as well. The stock's down around 2.5%. Take a look to see what kind of numbers we got. Esports are the future, by the way. I mean, the future's here as far as esports are concerned. It's unbelievable. The amount of people that tune in to watch other people play video games is ridiculous. It's insane. It's insane. Not for me. It's not for me. But there's more people that tune into esports and watching other people play video games than actually watch the Super Bowl, which is pretty unbelievable. But as soon as those numbers come in, I'll certainly be sharing that with you. I mean, just because I don't get it doesn't mean I don't see the value here. Just an FYI. I know I sound like an old man here, but that's just my thing. I'd much rather be playing video games, which I do. I play video games quite a bit, but I'd much rather be playing them than watch somebody else play them. That's just me. Why? Oh, this is hilarious. Paul G says my wife's going to leave me for her boyfriend after those Zoom puts. Oh, that's hilarious. Was her BF long on Zoom? That's funny. That is hilarious. So what's a good entry on Zoom? I see a couple of people asking. Yeah, as I've mentioned, going into this, I said that, risk reward wasn't good enough for me to want to get into Zoom before earnings came out. Obviously, it's doing really well right now. A little bit of a pullback. It was up as much as 9% here after hours, but now sitting up around 6%. It's still early yet. We could see where this goes as investors digest the numbers, but so far this all looks good. I would say that as far as an entry goes, maybe if there's some profit taking tomorrow and we can see this kind of pull back down to support maybe around 245, that would be an area that I'd certainly potentially watch out for, maybe around 250 as well. If it doesn't give you that opportunity and it just keeps going up tomorrow, then I would watch for the break over 272. If it's over 272, I think the momentum does continue there. That is going to be another area of resistance that I'll be watching out for. But so far, so good. I mean, obviously, the 50-day moving average is something you want to pay attention to. Right now, it's 267, but looks good, man. I think there's potential for this to actually make a decent move tomorrow, too. D Gravy asks, so is this one you pick up if you didn't have one already? And then he just clarifies AESE. I think that AESE would be one that I would certainly consider picking up, but it's a penny stock. They still got a long ways to go. Is it the future? Yes, I think it is. But they haven't been able to monetize this in a way that I think would make a whole lot of sense. 4 cents on $1 or $2 stock. So obviously a lot of risk involved here. But there's a lot of promise in it too. So if you go into it with the understanding that you shouldn't be whole accounting this, but maybe taking a little bit of money and putting into it, just kind of see where it goes. I certainly think that there's promise there for sure. But I don't know if I would just go running into AESE with all my money. I don't think that's a good call. But if you want to own some, I don't think there's anything wrong with it. So we got 163 of you guys hanging in. If you guys haven't hit the like button already, I certainly would appreciate if you guys did that. We are giving a reaction to earnings today. Urban Outfitters, AESE, and Zoom all reported today. Urban Outfitters came in and actually beat earnings per share, and they came in line with revenue. Not quite sure why the stock is down 10%. If you guys see anything, of course, feel free to share it in the chat. But right now it is getting hammered, down 10%. AESE is actually making a little bit of a comeback after trading down on their earnings. And looks like I don't have those numbers just yet. But as soon as I have them, I'll certainly share those with you. Don't have solid numbers as of yet. I don't even know if there was an expected earnings per share, but I think if they're just looking for growth here, um, net income for the quarter was 74.3 million compared to the net loss of 6.5 million the prior year period. So that is definitely good. So they are profitable, looks like. Improvement was primarily driven by the gain on the sale of WPT. Total revenue was 1.7 million, increased 182% for the third quarter of 2021 compared to the third quarter of 2020, driven by the increase of foot traffic in the company's HyperX Esports Arena in Las Vegas due to the increased number of events. So that is definitely a positive, and I think that could be a reason to start buying up AESC. But as you guys heard me talk about, $1.7 million in revenue for the whole quarter. That is not a lot. So there's a reason why the stock is down here. It's because it's tiny. The company is very small. It has a lot of growth potential for sure. And especially its exposure to Vegas is definitely good as things start to continue to reopen. I think this is going to become very popular, but still very tiny. $1.7 million is not a lot in the grand scheme of things. Looking at Urban Outfitters, this is actually coming back a little bit. If you guys are wondering about Zoom came in and crushed earnings. They did really well, came in and beat top and bottom line. Came in at $1.11. The expectation was $1.09. So they did really well there. They came in and actually beat on revenue as well, and then raised their guidance about $500 million in revenue increases for the next year. So pretty good stuff there for Zoom. Would AESE be your top esports play, or are you on Roblox Skills or etc.? Asks Jeff Chow. Great question. I think that I would go in. I'm in Roblox. I actually got some Roblox today on the pullback. So, AESE was probably something that's super speculative. They have a long ways to go. So I think that just for me personally and my own level of risk that I'm willing to take on stuff, I think I prefer to get into something like Roblox. So I have a position in there today. I took actually pretty far out. Got April calls on Roblox. Didn't take a ton, just a small amount. I just want to confirm. Sorry, no, I meant to take April calls. They're January calls rather. I like Roblox here. I would take Roblox over something like an AESE for sure. Now the potential for reward there is obviously high, but so is the risk. It's much higher with an AESE than it would be with Roblox. I think also looking at skills, SKLZ is kind of in the same boat as an AESE would be. Allied Esports is around the same. Skills is a bigger company, but the level of speculation is still there. It's still just as high, I would say, with Skills. You just have all of these people that watch this stuff, and they still have struggled to really fully monetize it. So I think these are certainly speculative, but if you're giving me an option, I'd much rather go with something like a Roblox. And it gave me a pretty good opportunity to get in today with the pullback that it had from 141.60 all the way down to 120. I think there's certainly potential for this to come down lower, so I may add to this if it does, but decided to take a shot at it on a big red day from Roblox. Certainly just made a lot of sense to me. Sam said talks about Urban Outfitters. Yeah, we shared those numbers here. The Urban Outfitters estimated earnings per share 89 cents. They came in at 84. They beat that. Their estimate was 113, and they came in pretty much in line. We'll just call that in line as far as the revenue is concerned. Yet the stock is down around 10%, and so it's been pretty tough to see this movement here after hours. Not really a clear explanation as to why that's happening. Let's go back to the 1 minute chart actually. So you saw this huge downdraft here on Urban Outfitters. Don't really have an answer to that just yet as to why this sold off. I don't know if maybe it's their guidance or something else, but it is really selling off here. And actually Zoom is starting to take a turn back down now as well. Zoom was up as much as 10% here after hours, and now it's threatening to go red. So Don of the Don Fran Show might get his wish here. Yeah, interesting to see this play out. Now it has turned red. Zoom has turned red. Maybe there's something in that report. Not quite sure the reason for the sell-off here, but Zoom was up as much as 10% after a huge, well, I won't say huge beat, but a really nice beat. It beat the earnings per share, beat the revenue, and raised their guidance, and the stock went up 10%. And that was actually bread after hours. Interesting. Interesting to see where this goes. Miguel Monta asks a great question here. Will big tech take over the metaverse, or will the new upstarts, what does that say? Any thoughts? I think you're just asking about the smaller ones, the for early movers rather. I think the one company, as far as like um, smaller companies are concerned, is Roblox, just because they do have first mover advantage, and there's such a huge demand for Roblox right now that I think that Roblox is not going anywhere. So I think they're going to be a huge player in the metaverse. Obviously, you have big tech like Facebook, right? They're going all in with this. I think that they will definitely be a big player in it. You have Nvidia, Qualcomm, all of these companies. I think that Roblox is potentially going to be a big leader in that. Will they be number one at the end of the day? You asked me about 10 years from now, will they be number one? I think they could. I think they can still be number one in the metaverse space. Facebook is going to try to take them over, and maybe that happens. But I still think that Roblox could do it long term. Stocks is at one point was close to 100 billion in valuation, and that's not by accident. It's not like Rivian, right? Where you sell 15 cars and then all of a sudden you're worth 100 bill. Roblox at least makes decent revenue, and they crush it. I mean, ask any of your kids. Ask your nephew, your niece, your brother, sister. Roblox is insane. Taking over the world. But that's going to do it for me, guys. Thanks so much for tuning in. We'll be back tomorrow. We'll give our reaction to Dick's Sporting Goods reports earnings. You guys know that I'm in Dick's on a pretty nice position. It's been doing really well over the last several days on a really nice breakout. I'm hoping that breakout continues. Tomorrow they'll report earnings pre-market. Also, Best Buy reports earnings pre-market, and we'll give you our reactions to all of that tomorrow as well. I don't know what's going on tomorrow afternoon. Let me just look that up real quick as I'm closing out here. Earnings, where are we at? So tomorrow afternoon, there's HP, Gap, Nordstrom, Dell. So not really like anything crazy after hours, but the big ones are going to be in the morning. So we have Dick's, XPeng, Best Buy, American Eagle Outfitters, Dollar Tree, Abercrombie Fitch, some more retailers, Burlington Coat Factory, all that good stuff. So, guys, some more to look forward to. I appreciate you guys hanging in during this Thanksgiving week. Pretty tumultuous time in the market today, but I came out unscathed. It was a great day for me. Hopefully it was for you as well. And that's going to do it for me. We'll see you tomorrow at 3:30 p.m. Eastern after 3:30 p.m. Eastern time tomorrow. And that's going to do it for me. Again, go check out ownthechaos.com if you want to get your free watches that we put out every day before the market opens. Love to have you there. Ownthechaos.com. The link's in the description. That's going to do it for me. My name is Brad. I'll see you tomorrow.